Good morning, everyone. I'm Carla Jones-Weber. I'm the Chief Financial and Administrative Officer at the Community Foundation, and I have with me Chris Cazzoni from Mercer. We just finished up our quarterly investment committee meeting, and Mercer comes in quarterly to meet with us as the investment consultants for our portfolios. So we thought we'd just take a few minutes and provide a quick update on how the portfolios have done, some current outlooks, and thinking about the future. So we have just a couple of questions for you, Chris.
Great.
Maybe if you could give us a quick summary of what you have seen in the markets. We know the markets declined earlier in the year, but we're seeing some of that return now. So maybe give us a quick update on where you think we're ending.
Sure. And as Carla mentioned, it's been a tough time in the markets this year. We've had rising inflation's really taken a toll on both the equity markets and the fixed income markets. When we look at just kind of the long-term growth portfolio, the 1 year it's down 10%. The good news, though, is we've had a real rebound in July and August. So just in July alone, we expect the portfolio to be up about 5.5%. And so far, August has also been a very positive month, and that's really continued because we've had some good numbers. Inflation seems to be peaking, and that's really boosted market returns lately.
What are you seeing in the index growth portfolio? I know those typically kind of go similar to each other, but there are some differences there.
Sure, and just as a reminder, the index growth portfolio doesn't have active management or alternatives in it, as opposed to the long-term growth portfolio. Long-term growth portfolio has held up better, and what we typically have seen is during volatile markets or when the markets are down, active managers tend to outperform. And we've seen that historically, and we've seen that now. And that's one of the main reasons why the long-term growth portfolio is doing about 3% better than the index growth portfolio, simply because of that benefit of that active management and the use of alternative investments.
Knowing that the asset allocation for the long-term growth portfolio and the index growth portfolio are very similar, but the moderate growth portfolio is a different structure. Could you maybe talk a little bit about what you have seen for returns for that and why we might see such a variance?
Sure. The moderate growth portfolio is really set up, it's about 50% in fixed income, which tends to have less volatility than equity markets. But we have gone through a very unusual market cycle where even fixed income has been really struggled, and that is solely due to rising interest rates. Interest rates have more than doubled this year already, and that's really due to the Feds really trying to fight inflation and raising interest rates to do that. That's had a really negative impact upon the moderate growth portfolio. Through 1 year, it's down 11%. We have seen a rebound in that, though. That's up about 4.5% in July, so that's also up. Not as much as the other portfolios, but it's moving definitely in the right direction. Historically, we do expect a lot less volatility in the moderate growth portfolio. It just has been a real struggle lately with the rising interest rates. We do just projections, long-term for all the portfolios. We expect that long-term growth portfolio to return about 7.1% over the next 10 years. So that's very strong returns. But when we go down to the moderate growth portfolio, there we project only about 5.5%. We do expect lower returns because it is 50% fixed income, and yields still, even though they've gone up, we're still looking at a 10-year treasury at about 2.8% yield. So it's going to be struggle to really get those strong returns going forward that we expect in the long-term growth portfolio.
So based on those long-term projections, our investment committee is always having the conversations about spending rates. And, we've talked a lot about if funds are held in the long-term growth portfolio or in the index growth portfolio, can they meet their spending need? And in the moderate growth portfolio, we always try and have that conversation about the fact that we know that there are going to be lower returns in that portfolio. And so really thinking about the distribution rates that are used if funds are held in that portfolio. So I would encourage people to continue to consider that and have those conversations when they're thinking about the investment portfolio that they've selected to participate in with their charitable fund. And at any time, you can always reach out to the Community Foundation staff, your account manager. I'm available if you have questions. Our Mercer team is on site quarterly, but always available for conversations via phone as well. So we are here to be a resource to you. And if you have any questions, like I said, please feel free to reach out at any time. Thanks, Chris.
Thanks, Charlie.
Have a great day.